You're probably looking for condo investment right now. But with the endless cascade of real estate advertisements in the market, you might be feeling lost because you don't know how to start. If you're this person, don't fret. This is broker Chris Rania, and here are the guiding tips to help you get started in buying a condo in the Philippines. Tip number 1. Assess your financial capacity to buy a condo. Condominiums worth ₱1,000,000. So before you start condo investing, assess whether you're financially ready for it. If you will pay your condo unit on an installment basis, you must have a stable income to sustain the monthly payment. And if you plan to pay it through bank or pag-ibig financing, be sure that you qualify for a home loan. It is important to note that lenders don't just look at your monthly income. They also look at other factors such as your debt to income ratio to decide if they will be willing to lend you. Lenders use this to measure your ability to pay your debts. To get this, divide your recurring monthly loan payments, meaning the monthly amortization of the home loan you're applying for, plus your other existing loans, into your gross monthly income. Then multiply it by 100 to determine how many percent of your monthly income goes toward your loan payments. If it's higher than 40%, then you may have trouble getting a loan. Here's a sample computation. A 3 million pesos home loan payable for 15 years at a 6.5% interest rate has a monthly amortization of 26,133 pesos. If this property is your only debt, divide it into your gross monthly income, for example, 80,000 pesos a month. Expressed in percentage, that's 33% debt to income ratio. Since this is below 40%, the bank is more likely to approve your loan. But if, for example, you're applying for the same home loan and your gross monthly income is 50,000 pesos only, your debt to income ratio will be 52%. Since it's too high, the bank might deny your loan application unless you have a spouse or a co-buyer that can provide additional financial documents to add up your income. So make sure that you consider this before applying for a home loan. If your ratio is too high, don't worry, there are ways to lower it. First, you can find ways to lower your debts. One way is to pay a higher down payment on the developer to lessen the loanable amount of your condo unit. Another way is to increase your income by looking for a new source of income such as establishing a new business. In addition to this, banks also consider your credit score. It's a score of your history in making timely payments. A high credit score means you pay back your bills on time, hence a higher chance of home loan approval. You can improve your credit score by making prompt payments on your loans and credit cards. Tip number 2. If you do not have enough lump sum cash for condo investing, explore pre-selling condo projects for a lower monthly down payment. Gone are the days when you need to make lump sum payments to invest in real estate. Developers here in the Philippines offer flexible payment terms and a low monthly down payment on their pre-selling condo projects. Here, you can buy a condo before it is built or while it is being built, and these are called pre-selling condos. Imagine by just paying the reservation fee, which is usually 10,000 to 50,000 pesos, you already secure the property under your name and lock in its current price and payment term. You can then make money if the property value goes up in the next few months or years. If you are a real estate investor, pre-selling condos are promising investments since their market value can increase by the time they're finished. Since the condo is under construction, you will pay the down payment, usually 10% to 30% of the total price, on an installment basis with no interest rate. For example, a pre-selling condo unit worth 4 million pesos has a required down payment of 20%, which is 800,000 pesos. Since the target completion date is 5 years from your date of purchase, then the 800,000 pesos is payable for 5 years or 60 months. Hence, your down payment would be 13,333 pesos per month only. This means by shelling out a small portion of your monthly income, you can acquire a condo investment here in the Philippines. Since there is no interest charged on the payments you make while the condo is being built, you have time to save up money. You can pay the remaining balance either in full or with a bigger down payment to lessen your loanable amount, which will incur interest later on if you pay through bank financing. You may browse our website to check pre-selling condos with low monthly down payments ranging from 8,000 to 25,000 pesos. Tip number 3. Compare prices. When you compare prices, don't just look at the monthly down payment. Instead, compare the total cost of the property. Condominiums have different prices depending on factors like where they are located and what amenities and features they offer. For example, condos on main roads are more expensive than condos situated 2 blocks away from the main road. So it is best to compare everything from the list price or the asking price in the market down to the applicable taxes and fees. Also, do not forget to compare prices within the condo project. It is important to note that some developers offer different price on their units based on floor level, layout, and unit orientation. Usually, condo units on a higher floor offer a higher price because of the provided view. Now, it is noteworthy that expensive condos do not mean that it is better, because the best type of condo for you will depend on what you really need and your personal preferences. So when comparing prices, think about the things you can and cannot compromise with a price. Lastly, don't forget to ask if the applicable taxes and fees are tucked in on your monthly down payment. If you buy directly from the developer, the other charges are usually 6% to 10% of the unit selling price. Other charges are not hidden charges, because what comes after a purchase is the applicable government taxes and fees, such as the registration fee, documentary stamp tax, transfer tax, notarial fees, and other administrative fees to transfer the title to your name. Tip number 4. Explore the developer's payment terms to avail discounts. Most developers will give you a discount if you can pay spot cash or deferred payments. Let's say you're looking at a condo worth 6 million pesos and the developer offers these payment terms. This means if you pay 5% spot payment of 6 million pesos, which is 300,000 pesos, you'll get 1% discount worth 60,000 pesos. If you pay 10% spot payment, which is 600,000 pesos, you'll get a 2% discount worth 120,000 pesos. And if you pay in deferred for 12 months, meaning the 6 million pesos is payable for 12 months at 0 interest rate, you'll get a 3% discount worth 180,000 pesos. Such options exist, and it's best to avail this if you have extra cash on hand. It is a good idea to make lump sum payments during the down payment stage so you will have less loanable amount. For example, instead of just paying the 15% minimum required down payment, you can pay 30% to lessen your loanable amount from 85% to 70%. Tip number 5. Looking for a lower price? Look for owners who are reselling their properties. Some condo owners resell their condo units below market value to dispose of their condo units quickly. But the payment terms are different from a property developer. They do not offer installment payments since their payment terms depend on the payment status of their condo unit. For example, if they already fully paid their condo unit, then they will require an upfront spot cash payment to have their capital back as soon as possible. On the other hand, if their property is currently on a mortgage, they can offer a sale with mortgage assumption, also known as pasalo in Tagalog, wherein the buyer pays the seller a certain amount for the property, and you, the buyer, will assume the mortgage and is now responsible for paying off its debt. This is a practical option only if you have lump sum cash on hand, because the asking cash out is usually not less than 100,000 pesos and can go up to millions of pesos depending on how much the owner already paid his unit. Plus, there are also fees and taxes involved in transferring the property to your name. You may check our website www.investatePH.com to browse pasalo condos or condos with assumed balance. Tip number 6. Do your due diligence. In every investment, there's a risk involved. Therefore, you must do your due diligence. If you're buying directly to a property developer, then be sure to check the developer's track record and if the condo project has a license to sell. On the other hand, if you buy from someone who already fully paid the property, ensure that the property is clear from any liens and encumbrances or any claim against the property. You can easily verify this on the Registry of Deeds. And if the condo is currently being offered as pasalo or with assumed balance, then make sure to double-check the payment status on the developer's office or the bank. As for the condo's ownership, you can easily verify this by going to the condo's admin office. Tip number 7. Research the property's location and future development in the area. You probably heard the saying before that real estate is all about location. It's because location significantly affects the property value and its potential rental yield. It determines the proximity and accessibility of your condo unit to transportation, hospitals, and universities. It also determines if you reside in areas that are prone to calamities, such as floods and earthquakes. That's why it is crucial to do a thorough research on the location. The good news is, we can easily do this right now because of our advanced technology. There's Google Maps to see the actual neighborhood of the condo project, and there's Fivolk's Fault Finder to determine the actual location of active faults in the area. Suppose you intend to purchase a condo for leasing purposes. In that case, its neighborhood is crucial because tenants are very particular to the property's accessibility and proximity to specific destinations like malls, offices, and universities. Furthermore, if you are an investor, then researching the area's future development is a must. New roads and infrastructures will lead to property appreciation and can give you substantial capital gain. Tip number 8. Choose your unit wisely. After you make a reservation, it may cost money to transfer to another unit, so make sure you choose your condo unit wisely. If the condo is ready for occupancy, it is best to see it in person before making a decision. And if it's pre-selling, then check out the developer's floor plan to see the unit's proximity to elevator and fire exits. Also, don't forget to consider its orientation or where it is facing, especially if you plan to list out your condo unit. Some tenants, such as vacationers, prefer accommodation with a good view. Lastly, do not forget the layout and size of the unit. You should choose the right size that suits your needs. Of course, bigger condos will be the best for starting families, but smaller condos have a higher chance of being leased because of the low rent. Tip number 9. Know the condominium's policies, features, and amenities. Condominiums have different policies and restrictions. For example, there are condos that allow pets, and there are some condos that prohibits them. Therefore, you need to research if the condo's rules and regulations are aligned with your needs. Also, don't forget to research the condominium's features and amenities. Here in the Philippines, you may notice that developers build condominium meant for particular groups of people. Condominium for starting families usually have bigger unit areas and amenities such as playgrounds, barbecue pit, and kiddie pool. On the other hand, condos meant for students have facilities such as a study area and library. Suppose you're looking for a residential condo, then I'm sure that you'll want it to have kid-friendly amenities and not amenities meant for students. It would be best to go over it to ensure that the condo has amenities that suit your needs and doesn't have rules you can't live with. Tip number 10. Transact with the right people. Here in the Philippines, you're only allowed to offer properties if number 1, you're the owner selling your property. Number 2, you are granted by the owner a special power of attorney to sell his property. And number 3, you are a PRC licensed real estate broker or a PRC accredited salesperson. Republic Act 9646 prohibits unlicensed brokers and unregistered salesperson from selling or leasing real estate properties here in the Philippines. Therefore, you should only transact with the right people for a safe purchase and avoid having future problems. If you have learned something on this video, then please subscribe on our channel. We promise to make quality content about real estate investing.